Good afternoon. This is Mark Espy with MarketTamer.com, also with OptionsRevolution.com. And we find ourselves on Friday afternoon, the 27th of August, after market close. I must remind everyone that everything that we speak about today is for educational purposes only and never to be construed as a recommendation to buy or sell anything. Well, we had a very interesting week, a very bearish week up until about Wednesday, and then we put in a spinning top, and it looked like this move to the downside was beginning to abate a little bit. Then Thursday, we had a bit of a narrow range but bearish day, and then we bounced significantly today, up 164 points in the Dow. There were some fundamental reasons today for that. The GDP was not quite as bad as expected, and Ben Bernanke's speech gave hope. So the question one needs to ask, is this short term, or are we going to get some follow through? I do believe we're going to get a short-term bounce, but it's not going to be sustained. We're going to come up here and test the 50 simple moving average, which is the blue line right here, and then possibly the 200 moving average and the red line right here, and the swing high 10,500. But I don't really believe it's going to be sustained. If, in fact, it does move beyond there, the areas that we would look at is this double top here at about 10,600, 10,700 from this shelf, right here in early August, and then the swing high back here in April at about 11,200 and change. If we break down below here, we're going to be looking at this level, the swing low here at about 10,000 is only about 150 points down, and then we would look at this double bottom here at about 9,800, and then down here just above 9,600. Now you may notice here that this is an inverted head and shoulders. Here is the left shoulder, head, right shoulder, and here is a peak and the peak right here, and this there are two touches there that are included in the internal trend line that I've drawn down through here, and it's just very symmetrical. And so what we're doing right now is testing the top side of this internal trend line. It could hold very easily, but this is a definite area that I'm looking at and to see if it will hold, in fact. We're looking at the stochastics, whipsawing back and forth into the oversold area. Looks like most recently there was a little bit of a turn to the bullish side, but still in the oversold area. Had a crossover of the MACD line over the signal line earlier in August, and it was separating very nicely and adding some bearish momentum, but it looks like the bearish momentum is beginning to abate a little bit and move back toward the zero line. So the other thing I wanted to mention is that we are pushing the bottom Bollinger Band, and that's one of the reasons. It seems like almost invariably when you push it too hard, too fast in the Bollinger Band, it will either begin to languish or actually move back up into the bands, which is exactly what it did today. So in summary, I feel like we are going to get a short-term bounce, testing the 50, possibly the 200 in this swing high, but not much higher than that. And then I believe we're going to turn back down and come back down and retest this and possibly lower. So with that, we're going to move over and take a look at the SPX.